Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 5th of November, Thursday. So, in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So, without further ado, let's start off with the fundamentals. When we take a look at yesterday's market movement, we can see gold falling by 0.36%. The pound also fell against the dollar as much as 0.55%. The dollar index inched lower by 0.08%, and oil climbing higher again by 2.62%. So let's get into further details with the headlines of today. First off, let's discuss on the pound, where the pound experienced a large fluctuations on Wednesday following a volatile market amid the US elections that caused investors to shift in and out of the dollar market. Now, furthermore, the Bank of England will hold its policy meeting later today to discuss on further policy easing to support the UK's economy. Now, the BOE might also discuss negative interest rates after the country's recent lockdown announcement to curb the COVID-19 virus. So overall, we can see pressure coming in on the pound, not only in terms of the Brexit, but also a possible stronger dollar. And now with the BOE's policy meeting to see whether or not a further easing would exert further pressure onto the pound, or would the market sentiment still be focused on the results of the US election. So either way, the pound and other major currency is expected to undergo large fluctuations by the end of this week. So moving on, let's take a look at the dollar, where we can see strong pressure ahead for the dollar index. Now, the dollar index initially extended its gains on Wednesday following the uncertainties surrounding the tight election race. However, as the dollar closed the market, it ended with overall losses after polling showed a lead for Biden. So elections aside, the Fed will also hold its policy meeting later today to discuss further action needed to support the US economy. Now, further loosening and a Biden victory could trigger a major sell-off on the dollar. Now, not to mention, there's also the jobs data, namely the non-farm payroll and unemployment rate from the United States on Friday later. So, instruments involved here would be dollar index itself and major currency pairing against the dollar. Moving on, let's take a look at the news release we have for today. So please take note, time stated here at GMT+8. So as mentioned, first off would be the policy meeting by the Bank of England at 3, where the interest rate decision is still expected to remain same at 0.10%. However, what investors want to focus on would be the policy statement and also the central bank speech at 3:30 later on. So overall, as we mentioned in the fundamentals, the Bank of England is most likely to provide an outlook or to signal further actions that will be taken by the bank in order to help citizens during the time of this economic crisis damaged by the COVID-19. However, what investors will want to expect is the change in interest rate decision, to see whether or not the Bank of England will decide on negative interest rates. So, investors can take a look at the news release from the Bank of England to trade for any currency related to the pound. So, moving on would be the Federal Reserve policy meeting at 3 AM, which is on following the time of GMT+8, would be on the 6th of November. So the FOMC statement, the policy statement, and also the interest rate decision will be at 3, followed by the press conference led by Chairman Jerome Powell at 3:30. So overall, interest rate will most likely remain at the same level. However, what investors will focus from the Federal Reserve would be the latest outlook on the US economy, provided the results of the election and also the current COVID-19 evolution in the United States. So, as we speak, large fluctuations will be expected in the market later today. So, moving on, let's take a look at our technical analysis. So, here's an overview of instruments to be covered. First off, GBP JPY H4 chart showing a downtrend. Euro Canadian dollar H4 chart also in a downtrend. For the Euro GBP H4 chart showing an uptrend, and for gold also signaling a possible uptrend. So let's get into clearer details with the chart analysis, starting with the GBP JPY. So constructing the Fibonacci from the previous high towards the low with obtained levels as such, where we can see that the pair is currently testing towards the has been rejected from the 38.2 Fibonacci, showing a false breakout, and now breaking below the 23.6 Fibonacci near 135.5, signaling a possible further downward momentum for the pair all the way towards the 0.0 Fibonacci at 133.3. So constructing a support level reach over here with two lows sense at close to 134.7. Cautious investors are advised to wait for a breakout below the support level before entering into short positions for the pair, where stop loss can be placed 40 pips from the level at 135.1, and take profit can be set 80 pips from the level at 133.9. However, the target can be all the way towards the 0.0 Fibonacci at 133.3. However, for aggressive investors, you can consider short positions at the current level 135.2. Stop loss should be placed 30 pips from the entry point at 135.5, and a take profit targeted below, just right below the support level at 134.6. Moving on, for the Euro Canadian dollar and its H4 chart, constructing the Fibonacci also from the high towards the lowest point, we can see that the pair has rebounded once again from the 0.0 Fibonacci near 1.5350, and currently the pair is testing towards 23.6 Fibonacci at 1.5440, where a breakout above would indicate further upward momentum, possibly a change in trend to back towards an uptrend for the pair. So after the breakout, cautious investors are advised to consider long positions. Stop loss should be placed 30 pips from the level at 1.5420, and a take profit targeted at the 38.2 Fibonacci near 1.5500. Whereas for aggressive investors, if the pair fails to break above the 23.6 Fibonacci, aggressive investors can consider short positions. Stop loss should be placed above the 23.6 Fibonacci at 1.5480, and a take profit targeted back towards the 0.0 Fibonacci at 1.5350. Next, for the Euro GBP in its H4 chart, now the pair seems to have stopped its bearish momentum after reaching a lowest level over here close to 0.8950. So constructing the Fibonacci from the high towards the low, we can obtain levels as such, where we can see that the pair is currently testing towards the 38.2 Fibonacci near 0.9060. Now, MACD signaling a bullish momentum suggests the pair to extend higher after successfully breaking above the 38.2 Fibonacci, where we can also construct an overall downtrend over here, where a breakout above the 50.0 Fibonacci would indicate a stronger confirmation at 0.9100. So aggressive investors can consider long positions at the current level 0.9050. Stop loss should be placed 30 pips from the level at 0.9020, and the take profit can be set targeted all the way towards the 50.0 Fibonacci at 0.9100. However, for cautious investors, it is advised to wait for the breakout above the 50.0 Fibonacci for a better confirmation before entering into long positions for the Euro GBP. So lastly, let's take a look at gold. So in its H4 chart, now constructing the Fibonacci from the high towards the low, we can see that gold is currently testing towards the 50.0 Fibonacci near 1910. Now MACD still in a biased bullish momentum, suggests gold to extend higher after successfully breaking above the 50.0 Fibonacci. Now after the breakout, cautious investors can consider long positions. Stop loss should be placed 50 pips from the level at 1905, and the take profit targeted all the way towards the 61.8 Fibonacci at 1925. Whereas for aggressive investors, if the gold fails to break above the 50.0 Fibonacci, aggressive investors can consider short-term short positions. with a stop loss 30 pips from the level above at 1913 or 1915, and the take profit targeted all the way towards the near to the 38.2 Fibonacci at psychological support of 1900. So for the positions in gold, please take note that today or tomorrow will be the announcement of the US election results, and that would have strong influence into the gold's movement. So please use proper risk management and take care of the stop loss and take profit every time you enter positions for the gold market. So that is all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next time on our market briefing, and happy trading to all.